Welcome to our weekly Forex Forecast, and today we are going to look at the week of July 15th to 19th, 2019. All right, so before we get started here, we are going to look at a disclaimer. This is for educational purposes only. Trading is a risky business, especially in the current market volatility, so please be careful with your money. And as usual, we'll start off by taking a look at our Forex Factory calendar here. And let's take a look. Okay, so first of all, this week coming up, we do have China. Chinese GDP numbers coming out. So Chinese data is important for for Australia and New Zealand. And it has an impact on Australian and New Zealand dollars. So watch out the impact on those currencies on market open tonight in the Asian session. And then coming up on Monday here, we do have Empire State Manufacturing Index, even though it's not in red here, it does tend to have an impact on the US dollar. So watch out for that. And then we have FOMC member Williams speaking. Now last week we had a Powell's testimony. So after the testimony now, markets are very optimistic for an interest rate cut. So with the interest rate cuts, generally what we see is that the stock markets go up and the currency declines. So we have seen US dollar drop based on that information. And we have seen Australian dollar, New Zealand dollar go up because the US and China are back to having their trade negotiations. So they have opened that aspect as well. So it has been very positive for the equity markets. And coming up, so we have FOMC at the end of this month. So pretty much everybody's expecting an interest rate cut from the Fed. And a lot of the FOMC members that have spoken have alluded to that fact. Powell alluded to that fact as well. So market is pricing that in at this point. So just wanted to kind of point that out from last week. That's what came out of it. And on Monday here, we do have CPI numbers, which is our inflation data. It's one of the important pieces of data that the central banks look at. So that's coming up for New Zealand. If it's positive, it should be good for the New Zealand dollar. So Australian dollar and New Zealand dollar have done really well based on that opening of the trade talks again. And then we have Australian dollar monetary policy meeting minutes. Australia has cut interest rates, and if the meeting minutes point to a further easing, we could see a decline in the Australian dollar. However, a lot of that is being overcome by this optimism of the trade talks between China and the US. So a lot of the impact of the easing of the monetary policy has been erased as a result of that. And then on Tuesday here, we have important piece of data here for the British pound. So this is the average earnings index as well as the employment numbers. So this is kind of like the non-farm payrolls that we see for the US. It is a big, important piece of data that comes out. So same thing for the British pound here. Employment numbers are very important. So we have to look at employment numbers. So if the employment numbers are positive, and then our earnings are not, then we could also still see a negative impact on British pound. So keep that in mind. And later on the same day here, we have a retail sales data. Again, a couple of the non-farm payroll came out positive, and the inflation numbers came out positive for the US dollar. However, Fed has said that they're still concerned about the state of the economy, which means they're likely to cut rates. So if the retail numbers drop, it will just give the market another reason why Fed should cut rates. If they come out positive, it will have a positive impact on the US dollar. However, not enough to say that Fed won't cut rates. And then we have Fed Chair Powell speaking once again on Tuesday here, as well as FOMC member Evans. Basically, what the market is looking for here is to see if the Fed will cut rates. And I think Powell has already pointed that out, that there's a strong likelihood that Fed is going to cut rates in July here. And then we have CPI numbers here for British pound. Like I said, CPI numbers are very, very important. The British pound, or the numbers for the British pound here out of UK have been positive for the CPI. So if that continues, it will be good for the British pound. However, if we start to see a decline in CPI numbers, a number that has, for the most part, come in positive, and it starts to turn, that will be negative. So right now, Bank of England is not looking at cutting rates. But if these numbers start to change, then the interest rate cut could be back on the table with Bank of England as well. So that will be negative for British pound if the numbers are below expectations. And then we have CPI numbers here, which is, again, inflation data, one of the core numbers that the central banks look at. Again, Bank of Canada has been another central bank that has not talked about easing monetary policy. At this point, they have stopped raising rates, but they have not really turned dovish. Canadian economy is still going strong, so there isn't too much pressure on Bank of Canada to cut rates at this point. So if again, like I said, the CPI numbers come out negative for Canada, that will be, or below expectations, I should say, it will start putting pressure on Bank of Canada to raise rates as well. All right, and then we have on Wednesday also, we have employment data out of Australia. Again, important numbers will have a direct impact on Australian dollar here. And then we have retail sales number out of UK. So tons of data from UK there. So British pound can be volatile this week. And then we have a Philly Fed manufacturing index here, more FOMC members speaking. And then Friday, we have core retail sales out of Canada and consumer sentiment number, as well as the FOMC members. So tons of FOMC members speaking right now. If all of them basically express concerns about the economy and how we need to ease the monetary policy, then chances are really high that Fed is likely to cut rates, which means markets will be very optimistic, and that sentiment will be very bullish going into that FOMC meeting, which means equity markets are likely to be pushing higher, and the US dollar may not do as well as the Japanese yen crosses are likely to go higher as well. All right, so that's it for our news part of it. So let's take a look at our charts now. Okay, so we'll start off with Euro US dollar here. So we have seen that Euro dollar has been trading in this range for some time now. So last week we had this evening star type of formation here, and price hasn't really done anything since that. So we have had a pullback into this previous support resistance level at 1.1280. At this point, this one is interesting because right now markets are very positive, or the sentiment is very positive for an interest rate cut, which is bad for the US dollar. So we'll have to be careful. There are a lot of external factors that are playing a role beyond just the technicals. So we have to keep those in mind. From the technical perspective, though, this looks more like a pullback for a further move down. So that will be the first thing I would look out for. If price stays below 1.1280 or 1300, then I'm looking for a drop. Now, what can happen here is that price could just hold this and then do one of these and go higher instead. So we're at an interesting level in euro dollar. I would say the bias is still slightly bearish here, but watch out for this type of a move price could just bounce off of this trend line and go higher. So it's still trading in the range, and it could go towards the top of the range. So I'm going to say bearish bias. I would look for price to drop towards 1.1100. But like I said, if it does one of these, basically if it breaks above this 1.1280 or 1300 level, then it turns bullish at that point and it's likely to go higher. All right, so pound dollar here. Pound dollar, we saw a bit of a drop, came into the support level, and it's pushed higher now. So this one is looking a bit bullish here. This one could go higher. So I would look for price to go higher towards the top of the range. So this has also been trading in this range here. So this is what we have. So this is the range price has been trading in. It kind of looks bearish here, but it hasn't quite broken to the downside here. And because it hasn't broken to the downside, now this one could go towards the top of this channel, right? So bias, I would say, is bullish for British pound here. And now we do have to watch out for support and resistance right into where the price is currently, right into that level here. So if you find it getting stuck at this 1.2620 level, or even, yeah, so about 1.2620 level, that could mean that it would go lower. But for now, I'm looking for it to go higher. First target would be 1.2680. Second target, 1.2850, back into the top of this little range that it's been trading in. So bullish bias for British pound, but if it stays below 1.2620, then it could drop further. But for now, bias is bullish for pound dollar. Aussie dollar here. Aussie dollar, we were looking for a drop last week. It dropped into this level, and then we have this bullish bias ever since we heard Powell's testimony. So now this is looking bullish, and first target here would be just the top here at 7050, so 0.7050, and then beyond that, we are looking at 0.7150 essentially. So bias is bullish, but watch out for this support resistance level at 7050. If it doesn't go through here, because twice before price hasn't been able to break it, then it could come back into this range that it's been trading here as well. So that would be the only caution, but for now, I would say bias is bullish and looking for price to go higher. Okay, and the first target would be 7050, second target 7150. New Zealand dollar. New Zealand dollar has been quite strong. Last week, we were looking for a drop. It dropped a bit, and then since then, it has gone up. So looking bullish, we have a strong bullish candle close here. So the first target, again, would be into this previous support resistance, which is quite strong. So 0.6720 will be the first target, and then it could go all the way up there. So I would say second target is 0.6780, and then it could just continue on going, right? So, but for now, these are the two targets. Bias is bullish for New Zealand dollar. Dollar CAD here, this one is looking bearish. We have a bearish pin bar. So looking for price to drop here. 1.2970 is the target. So bearish bias here for dollar CAD. And in terms of a pullback, we could look for a pullback into 1.3060 area into here. And then I would look for a further drop here. So bearish bias here for our dollar CAD. Euro pound here, this one is looking bearish here. So we have a doji. I will look for price to drop here. Target here is 0.8860, and then second target 0.8760 here. So bearish bias here for Euro pound. It hasn't been able to break this level in last little while, so looking for it to drop. Euro Swiss franc here, this one is looking bearish as well. We have seen price drop here, so looking for it to go down further. First target, or the target here, is 1.100. So bearish bias here for our Euro Swiss franc, and a potential pullback level would be into 1.1100. So bearish bias here. Oops. Okay, so Euro Swiss is bearish. Pound Swiss franc here, this one is also looking bearish. And next target here would be into this support resistance level at 1.2220. So bearish bias for pound Swiss as well. Dollar Swiss franc, this one has also turned around. So bias is bearish here. In terms of a pullback, we could get a pullback into 0.9880. And then first target here would be into the base of this candle at 0.9780. And then we're looking at 0.9700. So bearish bias here for dollar Swiss franc. Pound yen here. Let's take a look. Okay, so a pound yen, it came into the support here, hasn't been able to break the support. And we have an indecision candle here. Price opened and closed at exactly the same place. And we have pins on both sides. So at this point, this is neutral and it can go back up. So if it doesn't break through this support level here at 135.20, if it doesn't break below this, chances are it's going back towards the top of the range. So in this case, I would look for something like this, a retest of the low here, and then a further move to the upside. But bias is neutral for this week. If it breaks the low, then it could drop down further towards this pin here. But for now, bias is neutral. And if it doesn't break the low, it's likely to go back towards the top of the range. Euro yen here, this one is looking bearish here. So bias still stays to the downside for this. Okay, so this one has also been trading in a range. As we can see, last time we were looking for a drop, we got a bit of a pullback, but it hasn't quite dropped yet. So I'm looking for that drop still. 120.80 is the first target. And only if it breaks this target would I look for the next level, 119.50 to the downside. The problem right now that we are seeing is that US dollar is weak. And as a result, euro dollar was going higher. So if euro dollar continues to go higher, this one could turn around as well. But for now, I'm looking for price to come back towards the bottom of the range, this support level here. And then we'll have to see what it does, if it will actually does this. That's one scenario. Our second one is if it breaks through to the downside, only then am I looking for that move to the downside. So for now, bias is bearish. First target is 120.80. Second target is 119.50. Dollar yen here. So this one is looking bearish as well. We have a nice bearish pin bar. Now, do keep in mind that we are into support here. So that's something to be mindful of. But for now, bias is bearish. And next target here will be 106.80. So bearish bias for dollar yen as well. So in this case, the move that I'm looking for would be a bit of a pullback, potentially into 108.20, and then a further move to the downside, back into our bottom of the range there. So just a request to slow down here. The pen ink ran out. Patrick, I will have a spreadsheet that you can download with this. So you don't need to memorize all the levels. If you just, I will show you where to go. You can just download the spreadsheet, so you'll have all these levels written down in the spreadsheet already prepared for you. Yes, and the recording will be posted on the YouTube channel as well as on my Facebook page as well as the Facebook group. So you have tons of options for getting this. So do not worry. Okay, so here we are looking at Aussie, but I will slow down. Okay, here we are looking for Aussie yen here. So Aussie yen did not break through this support here. It's pushing higher, and part of the reason is because Australian dollar has been quite strong, especially ever since we heard that US and China are back into trade negotiations. So that has given it a push. So I would look for price to go higher back into here. So I am slightly bullish here, not completely bullish, slightly bullish, looking for it to go towards the top of the range here. And then we could have this type of a move to the downside. So slightly bullish here for Aussie dollar. Target would be 76.35 back into the top of the range. And then I'm looking for it to reverse from there potentially. So that's what I am looking at. So slightly bullish for Aussie yen. New Zealand yen, the same thing here. This one could go towards the high of the range here, but I'm not like over the top bullish on this. Just slightly bullish. It could do a test and then drop from there. So that's kind of what we are looking at. Bias is slightly bullish. 72.80 will be the target for New Zealand yen. All right, and then we have CAD yen here. CAD yen has, last time we were looking for it to go higher. It did a little bit, and then it has dropped from there. So for this one, bias is actually bearish, and I'm looking for it to drop further. First target would be 82.30, and then we could see it drop further towards 81.80. So bias is bearish here for CAD yen. All right, so let's go into our commodities now. We'll start off with our gold. Gold has been trading in this range here. So if we take a look at the daily, we see that the gold has been trading in the range, hasn't really done a whole lot. So I'm still looking for gold to be range bound for this week as well and trade either between 1426 and 1380 or within the outer ranges here. But I think this is, for now, this is range bound. We do not know whether this is, so right now this is being a pennant or this is a pennant. What we don't know is it going to break to the upside or is it going to break to the downside? So for now, we don't know. It's just neutral. So bias is neutral. I'm looking for it to trade within the range. And the move that I would look for would be something like this, just kind of back and forth, which is our usual range-bound move here. So that is gold. Silver here, silver hasn't really done a whole lot either. This one has also been trading in the range for the last few weeks here. So I would look for it to go potentially towards this 1550 level. But if it doesn't break this high, it is into resistance right now. If it doesn't break this high here at 15.32, it can come back down and then it could potentially break to the downside. So again, I'm neutral on this one as well, slightly looking for a slight move to the upside, but I would be careful. Oil here, oil has done well. So looking for it to continue further. So we saw price move up. There were some concerns in regards to the supply of oil and supply chain disruption. And that's why this one has pushed higher. So in this case, I would say bias is bullish, but do notice that we are into this support resistance level. So be careful with that. But otherwise, bias is bullish. I would look for a pullback and potentially move into this 63.80 level. So this entire drop is getting filled now. So bias is bullish for oil and pullback is 59.80. Then looking for price to go into 60.80 and then potentially into 63.80 over the course of the week. Copper hasn't done anything. It's just neutral at this point. It could drop further. So I am looking for price to go towards to retest this 2.59. If it breaks through this, then it could go lower. But for now, this is looking neutral. What I'm looking for basically is, let me draw this again. So something like this. That's what I'm looking for. However, it has been trading in a range. So if it doesn't break the low, chances are it's going to go back towards the top of the range, right? So it is range bound. So be careful. Bias is neutral for copper as well. Bitcoin, I do not have the current latest chart. My chart stops on Friday because my broker is closed. So please do look at the new chart or look at the trading that has happened on the weekend. But based on this one here, bias is still to the upside. It has been stuck here for a while, hasn't really gone anywhere. So if you look at the daily chart, this is what we are seeing. But even in the daily, there is that bias to the upside, and we could see price go higher. But it's trading in this range until it breaks out of this range. We don't really have a true measure of which direction it's going to go in. So for now, overall, it's bullish, but still stuck in this range. So we need to see a break out from the range. So my bias is bullish to neutral. I will look for it to go toward 13,200 level, and then we'll have to see how it reacts there. S&P 500. Okay, so we were talking about Fed cutting rates. When Fed cuts rates, now that is bullish for our equity markets. So we have seen equity markets go up. S&P 500 has broken here through the high here. So this is looking bullish. I will look for price to go up further here, maybe a potential pullback into 29.95 or potentially into 29.80, but looking for it to go higher still. And target here is 30.30. So bias is bullish here. A lot of optimism in the equity markets with Fed cutting rates. Now, we do have earnings starting tomorrow. So watch out for that. If the earnings start to decline, that could have a negative impact on the equities markets. But for now, from technical perspective, this is looking bullish. And from fundamental perspective, with Fed rate cuts coming, that is also bullish. So bias is bullish for S&P 500. NASDAQ here, same thing. Bias is bullish. And I will look for price to go higher here. And the target would be this 80, so let's say 81 level here. Actually 80.80, I like the 80.80 better. So bias is bullish right now. In terms of the pullback, we could get a pullback into 78.80 potentially, and then a further move to the upside. So bullish bias here for our equities, for our NASDAQ as well. DAX hasn't done too well. We have seen a drop here, so bias is bearish for DAX. And looking at target will be 12,200 and 12,000. So bias is bearish for DAX here. And so if ECB starts to, well, they have been talking about interest rate cuts, so not interest rate cuts, but easing of the monetary policy. So if we hear further comments around that, that could cause it to go up. But for now, bias is bearish, 12,200 and then 12,000 are the targets for DAX. And then FTSE here. FTSE is also bearish. We have a nice bearish candle close here. So next target here is 74.60 level, back into this support resistance level. And then if it manages to break through that, then 73.60. So bearish bias for FTSE. And then Nikkei here. Nikkei has been trading in a range. So this is the daily chart. And we see prices just been stuck in this chart, in this range here. So Friday close was bearish. I would look for a price to drop towards 21,500. And then this will be the critical point of what happens. So I'm looking for this drop, but then we could see this type of a move back up. So right now my bias is neutral until such time that price breaks out of this range. So either we need to see a break to the upside for a move to the higher or move higher, or we need to see a break to the downside for a move to the downside. For now, this is neutral, looking for it to come back towards the bottom of the range at 21,500. All right, so that brings me to the end of our analysis here. And let's go back. If you would like to join me, I do a daily market analysis similar to this. We do look at more pairs than we have today. We look at some crosses as well. You can join me. So we do daily market analysis call every Monday to Thursday. So we start off by preparing the weekly analysis, and then we go into the daily market analysis where we look at the daily chart so that we are closer to price for trading on that day. You will also get a spreadsheet from me, a forecast, our watch list, where we'll have all the pullback levels for potential entries, as well as the target levels for each pair with the market direction as well. And you will also be part of private Facebook group where you can talk to me, ask me questions. So you have full access to me as well to get my opinion on things. And if you would like to join me, you can do that you can go to this link, bit.ly @TradeVault, and the cost for this is $127 a month. Or if you buy yearly, then you get $550 off. So it's only $997. So that's it for today. And if you're looking for that spreadsheet, you want to go to tradingwithvenus.com/forecast to find the watch list spreadsheet for today. So you want to go to tradingwithvenus.com and forecast. And you will come to this page where you can download today's analysis watch list for free. There's no cost to it, and you can go download it. But if you have already joined my list, you don't need to do this again because I will send it to you after our call here. So that's it. Any questions before we wrap it up? Okay, no questions. So question here is that I give my bias to the up or downside based on the candles. Yeah, I give more importance to the previous candle than I do to the entire trend. So I'm looking closer to price than overall trend, but I do look at overall trend as well. And within that trend, I'm looking at the immediate, what do you call it, the candle that we have that closed. All right, so that's it. We'll call it a wrap. You guys have a wonderful rest of the weekend, and I will see you again next time. Bye for now.